Hello, it's Jonathan Wellham of Rocklinc Investment Partners, and it's September the 13th, 2017. Trust everybody had a wonderful summer and is getting back into the swing of things now that we're getting close to the official fall in another week or so. Now, I wanted to provide an investment update for you, at least cover off some of the key things that have happened year to date. And I also want to talk about some administrative issues in terms of Rocklinc and some things that are going on in terms of the political environment. So on the first slide, you can see the key points, or the 4 points that I want to cover: the current market update, office move and staffing, impending tax changes, and then the new Rocklinc Partners Fund that we'll be offering in short order. So let me go through each of those quickly. On the next slide, it's entitled Current Market Update Year to Date. And so a lot of investors are saying, well, how are things going? My portfolio is chugging along. It's a little bit ahead of where we started the year, but it seems like things have come back a little bit. What's happening? And so forth. So I thought, well, here, I'll give you 3 key numbers just to give you a sense of sort of what the bigger picture really is, and sort of help explain sort of the progress so far this year and what's been happening. So the first number is actually the TSX. That'd be the Canadian stocks. Canadian stocks have done nothing this year. In fact, they're slightly negative if you just look at the stock prices. And so this is an important measure, because if you're looking at an index and we're buying a lot of stocks that are on that index and it's negative, then that's going to give you a good indication of how things have been performing in the Canadian market. The second number is the S&P 500, which is a broad measure of some of the largest U.S. companies. And you can see that it is actually up about 11.6% year to date. That's as of today, the close of September 13. And you're thinking, wow, that's amazing. What amazing return that is. And you've probably been hearing quite a bit about that if you listen to the radio. Record high in the US, and on it goes. But the third number on that sheet is very important, and that's the Canadian dollar. The Canadian dollar has actually gone from 74 cents at the beginning of the year and actually topped 82 cents recently, and it's settled in just under 82 cents today. And that's about a 10.2% move so far this year. So if you have US stocks and our dollar actually has gone up 10% and US stocks have gone up 11%, actually you've only gone up 1%. And so the issue really that we're seeing here, and this also pertains to the Canadian stocks, because most of the Canadian businesses have substantial US business or US revenue. And therefore, as the Canadian dollar comes up, their revenue as priced in US dollars actually goes down. And so what happens is you get an offset, basically. And so what you're seeing is a lot of movement in the valuation even of our own portfolios, but really just driven by currency changes. And so my caution to investors, and I get a few calls from people, they're saying, well, why aren't things going up? I see the stock market's at record level. And in virtually every single case, what we're seeing here really are just currency moves. And we don't control currency moves. We don't invest based upon currency moves. We invest based upon the businesses, the growth of the companies, the profitability of the companies, and the long-term capital growth potential in the businesses. And so currencies will eventually all wash out in the end. And I'm much more comfortable owning global companies, even if they come under a little bit of pressure, because our dollar jumps over short periods of time. Our dollar will settle out. We've got major issues here in Canada, and so I'm not bothered by that at all. But it's important that you just understand that. So we've actually done very well this year by being ahead of the market, but it might not seem that way unless you understand and take into consideration the currency changes in terms of portfolio. But the companies, the businesses we're investing in are doing very well. And so we're very enthusiastic about our investment positions. I will also just point out just quickly on the bottom of that slide, we are careful, we are cautious. The central banks, as you know, are trying to get interest rates up. If they're successful at continuing to put interest rates up, there is absolutely no question we're going to see a slowing in the economy. And that will provide, again, downward move in stocks and opportunities to buy stocks at lower prices. So we want to be very, very careful, very vigilant. Personally, I don't think they'll be able to put rates up very much because of the indebtedness of governments, the indebtedness of corporations, and the high indebtedness of individuals. And so we'll wait and see. We're already seeing in Canada some drops in some of the key real estate markets, so that if you look at Toronto, for example, we've seen a 15 to 20% drop in prices already in Toronto. And so things can move quickly, and we want to be well positioned to take advantage of those moves. So that's just a quick update on the market. The big issue there is really stocks haven't done anything if you measure them in Canadian dollar terms. So any progress is good progress. And we're quite pleased with that and the companies that we own. Now, in the next slide, I just point out 2 points there. Number one, our office move. We now have moved our office to an adjacent office in the same building. So we're still at 4200 South Service Road, but we've gone from the one suite at the front of the building to the suite at the back of the building. Why do we do that? We needed more space. So we've got about 35% more space. And there's a couple pictures going up on the screen there. You can see inside the office, it gives us more room. We've got 5 full-time employees. Probably will be adding another one during the course of the next 12 months as we continue to grow. And so we just needed more room. And so when you come by the office, just take another 10 steps down the hall, and you'll find us in the building there. And of course, we look forward to having all of you come by the office in due course. The second item on that slide, it really deals with these impending tax changes. We're getting quite a few questions from professionals and business people about the rumored changes in taxes on the part of the Liberal government or federal government. And so I just want to point out to you, look, we mentioned this in a previous update. Write to your MP if you're concerned about this issue, and you should be concerned about it. We don't know exactly what the changes are going to be. We will communicate our views on it once we hear them. And are there strategies that, of course, we'll have to rely on tax accountants and tax strategies. But the Liberal government, currently, the federal Liberal government, is bent and determined to stick us with a lot more taxes, and especially small businesses and professionals, which are really the heart of the economy. So I won't belabor the point. You know how much I disagree with any kind of increase in taxation. But as we see the changes coming, and if they do go ahead with some of these changes, then we will do our best to link you into different sources that will provide information on how to minimize tax liability. That's really all we can do, and continue to try to make money by investing in great businesses. Now, on the last slide, I just wanted people to know that we are going to be offering a new investment fund called the Rocklinc Partners Fund. We anticipate that this will be up at the end of the month, and this will have 2 classes within the funds, one for smaller investors, one for larger investors. It'll be very competitively priced. The management fees will be under 1%, so very competitively priced. And it'll be a focused value portfolio, very similar to the companies that we are investing in our segregated accounts and the accounts that you have with us now. And it's going to help streamline our business, build some more efficiencies. And that's what we're looking for, more efficiencies in how we manage people's money. And no increases in costs for anybody. And where appropriate, we might be able to use the fund, but of course that will be discussed with clients. It'll also make it easier for us to sell our investment services to clients that are not fully discretionary, so they're a little bit more at arm's length from our organization. And so we're looking forward to, again, be able to expand the base and provide future opportunity for growth and for greater employment in the company, more research analysts, and so on. And so we'll have more details about this. This is an offering memorandum. It'll be priced once a month, and it'll be really exclusive just to us as the exempt market dealer, Rocklinc Investment Partners. So there's a quick update on a number of issues. And so if you have any other questions, please call, email, and or stop by the office and see our new office. And again, we appreciate your support and look forward to communicating more with you in the weeks and months ahead as we round out 2017. Thank you very much. Bye now.